Can a gold rally be sustained? We have Gary Wagner and chart this next. Gary, thanks so much for joining us this Friday.
My pleasure. My pleasure as always. And as we say on the islands, happy Aloha Friday.
Gary, as we wrap this week, we had a very heavy data economic week with jobs numbers coming out this morning, much better than expected. Obviously, you were eyeing this, right, Gary?
You know, everybody was eyeing the non-farm payroll report that came out this morning. And that, along with the FOMC meeting that took place this week, has really got traders looking to see the direction in gold and the equities markets.
Now, Gary, I had many people write in and tweet in asking me to ask Gary Wagner, can this gold rally be sustained? I know you were really looking for a correction down to 1262 before gold could start that sustained rally. How do you see it set up?
You know, last time we spoke, I was looking for the beginning of a sustained rally in terms of the gold market and gold prices. To be honest, I've been disappointed. There's no doubt we have seen some underlying pressure when I had hoped we would see the market actually form a base. And the real question now is whether or not the most recent low, which is 1268, will hold. If that holds, I do believe we could be forming a base here. But if it breaks through that point, that would lead to a quite different scenario.
So, Gary, we've seen so much volatility this week and last week. Have you since changed your stance? How do you know, or how can we know when a sustained rally will begin with gold?
In terms of whether or not I have changed my mind in terms of my overall perspective on gold, I've changed the timing in that I do believe that there will be a sustained rally. The real question now is, we were looking for a correction and following the correction to have the rally. So my real question now is whether or not the correction that we had been through is actually over.
So, Gary, last week we looked at specific pivot points to look for to be able to identify a rally. What have you brought us this week?
In terms of our insert today, what we're going to be looking at is whether or not we've sustained any critical or long-term chart damage with this most recent corrective action.
And Gary, before we get to your insert this week, what are your thoughts on silver?
In terms of silver, I'm looking at it to be lackluster at best. In fact, I was reading an article on the Kitco newsfeed yesterday about imports to India. And whereas imports to India in terms of gold was up, I believe, 16% over last year, imports for silver were actually down 42%. And that's quite interesting. We have seen silver not have the traditional luster that it has. Critical support in silver is roughly at $19. If it breaks through there, my belief is we could go to the mid $18, $18.50, $18.60.
All right, Gary, let's get to it.
On today's insert, I want to talk about the most recent price activity in gold, this downside pressure that we've seen, and how that relates to the last couple of inserts in which we talked about a potential very strong rally coming into play relatively soon. And what I will attempt to answer is A, have our long-term outlooks, or has there been technical damage to the charts to the point that I have seen a different viewpoint? And secondly, how do we make sense of this current activity? So if we take a long-term view of the market, there's a couple of things that are absolutely evident. And that is 2008 to our record top, June of 2012, that 4-year cycle moved gold to its record top. From there, though, we experienced a period of time, and that period of time was all the way up to at least 2014, in which we hit really our double bottom here, that the market has been under tremendous pressure. So when we take a real historical view of the market, we have a 4-year block where the market pretty much went straight up, and then after that, about a 3-year block in which the market has come straight down. The first thing that I felt was fairly critical when we looked at this market was the fact that as this market corrected and came down, our 61% retracement, and that retracement is a retracement of this entire rally, was where the market tended to bottom out. And it did that, of course, on two occasions. These are our bottoms here. In terms of the basic model that I was looking at in a Elliott wave count, there were a couple of ways that we came to this conclusion, but when we look at this correction now, one possible model is wave 1, wave 2, wave 3, 4, and then wave 5 is a flat, and that would terminate this primary or major fourth. This is our major third. That is the reason I believe that once we complete this corrective period, we're going to go into a major fifth, and that would be the substantial rally. Now, I came to the idea that we were close at hand as the market rallied $200 beginning of 2014 all the way up to $13.91. That to me was fairly significant, and one of the primary reasons that we saw it as being significant on a technical basis is if we take a look at these long-standing tops that are in the market that will form a trend line or a resistance line. It was quite clear as the market went down, of course, that it remained at these particular resistance points, and those resistance points held. But we did see something different occur as this market rallied and went to 1400. We had a clear break above that. So that's the reason that we're looking for the potential of a strong rally in the market. However, that's not what we're seeing right now. So the long-term view is one thing, but short-term we've been under some pressure. I'm pulling up a daily chart. This daily chart, Japanese average format, we can easily see the rally that we got at the beginning of 2014 up to 1390, and then the correction that we have been witnessing, and this is what, since March all the way through the beginning of May or as current. And my sense was that what we might be looking at, and one thing about a Japanese average is it gives you clear defined trends as well as strength of trend. We had a clear defined wave here. We came up to a 50% point. We then moved down to a new low because I was looking for the market to go to 1262, and my sense was that we might have at this point seen the bottom in the market and we should be moving higher. However, when we take a look at the most recent activity, it only went up to about 1310 and then stalled, and has now been under pressure as we see it coming down, trading roughly at 1285. We have support at 1275 and 1268. Of course, that's this low right in here. The 61% retracement which is held, and that's why I believe we haven't seen long-term damage on the charts. As long as we remain above 1262, we're still, I believe, in good shape for a potential rally. However, although I believe we did get a clear and a defined bottom, that's right here as the market came down. We had this extreme range day in which we dipped well below 1275. That was the recent low, hit a low of 1268, I believe. And then as you can see, especially with the Japanese average candles like this, it was my sense at that point that we're probably going to move back into an impulse phase. What we might be seeing here is a continuation of this downtrend, and what that would tell us, if that's the case, is that this current wave 2, this corrective wave, has not concluded, and it could go and test this 1262. We will see how it unfolds. However, because the market changes so rapidly, and especially the jobs report, which is coming out today, I wanted you to have the most up-to-date information and forecast available to you. And to that end, members of Chart This after the show are going to be able to view the weekend review. It's what our paid subscribers get. Watch the weekend review and the most up-to-date forecast on gold. Simply go to our website, goldforecast.com. You'll see this Chart This after the show. If you're not a member, click this. That will let you sign up. If you're already a member of After the Show, simply fill out your username and password. And once you log in, you'll see a new set of menu items, and you'll simply click after the show, and that will take you to the most recent after the shows. Again, Fibonacci retracement candlesticks as they pertain to the short-term and long-term forecasts in gold.
Gary, as always, thank you so much. We'll see you next week.
Thank you very much. I want to wish all of our Chart This viewers a great weekend and prosperous investing and trading next week. We'll talk to you real soon. Bye-bye.
And thanks for watching this edition of Chart This. If you have any questions for Gary Wagner, email us at newsfeedback@kitco.com. Have a great weekend.